So good morning, and great to be here, and likewise my huge thanks to CGAP, Sophie, and to AXA for this fantastic event. It's great to see us building on last year's successes. Thank you to CGAP for your leadership, for AXA for helping to show the way, Your Majesty for the leadership on this topic. And I'm very happy to be here to if you like, represent the regulatory voice on this topic. And nice segue from the closing statements from the previous panel around the role of regulation and policymakers in this space. And a statement that supervisors, policymakers absolutely need to be part of finding joint solutions to this challenge. A few comments by way of introduction also around the International Association of Insurance Supervisors. For those of you who don't know, it is the global standard-setting body for insurance supervision with over 200 members from around the world, representing 97% of global insurance premiums, around 50% of which are from emerging markets. So it's the global insurance supervisory community. And my journey, my title should now be outgoing Secretary General, but a few weeks left. But my journey on inclusive insurance actually started not long after Her Majesty's, and mine started in 2009, 17 years ago. When I was young then, and a fairly new head of insurance supervision in South Africa. And I was roped into becoming the inaugural chair of what was the Access to Insurance Initiative, the A2II, which was a groundbreaking partnership between insurance supervisors and development partners. And CGAP was there from the very beginning. And I think that was groundbreaking in a sense. I can't think of many other global standard-setting bodies back then that were talking about inclusive finance. And we put out a 2012 application paper on this topic of what regulators can do. And it's been on the agenda of the AIS for almost 2 decades now. Fast forward to 2026, I think the opportunities for insurance for all are greater than ever. It is amazing to see how this topic has come up the policy agenda in recent years. And Sophie, thank you very much for your comment, which I cannot agree with more, that actually inclusive insurance is not part of inclusive financial inclusion strategy. It is really a precondition for financial inclusion. And that is absolutely a message that the regulatory side we echo. There are few topics where you can get agreement amongst 200 insurance supervisors around the world. But actually, this is one of them, that regulators there have to be and should be part of finding joint solutions to the topic of providing inclusive insurance for all, which is a key precondition for financial health. But as mentioned, it's part of broader objectives of not only societal resilience, but also sustainable development and job creation. And that's reflected in the strategy of the IIS. So societal resilience and the role of inclusive insurance is one of the key priorities. And the work that the IIS is doing is in 2 main areas here. One is on the advocacy side and making and helping to bring this up the policy agenda together with the World Bank and CGAP and others, including on the G20 agenda. So we contributed to a high-level event with the G20 on this topic, and thank you, Antoine, who was there as well. And secondly, it's about sharing the lessons amongst insurance supervisors around the world about how this can be done in action. And there is no single one-size-fits-all approach to that. And so we're working with the World Bank, for instance, on practical examples of what can be done to narrow natural catastrophe protection gaps. And we're further developing an application paper on this very topic as well. So that's on the IAS side. But with us here today, we have two practitioners who are in the field, and reminding us that building inclusive insurance, societal resilience, sustainable development is a real policy choice. It requires a strategy and political will and regulatory innovation. So we have two leaders who understand from very different vantage points what it means in practice to build inclusive financial markets. So I'd like to welcome, first of all, Renato Gomes, former Deputy Governor of the Central Bank of Brazil, where you led the competition and innovation agenda. And secondly, Her Excellence Fatma Al-Jabri from the Central Bank of the UAE, with oversight of market conduct, consumer protection, and financial crime, and a key part of the UAE's national financial inclusion strategy. So welcome, and Renato, I'll turn to you first. Brazil has engineered one of the most ambitious financial inclusion transformations in the world. PIX now processes over 5 billion transactions a month and has brought millions of previously unbanked Brazilians into the formal financial system. More recently, open finance has created the rails for consumers to share their financial data across institutions, unlocking more tailored, affordable products. So how do these innovations, PIX, open finance, and the broader digital financial ecosystem in Brazil help translate into better financial health outcomes for ordinary consumers? And what has the Central Bank of Brazil done in this regard?
Well, thank you so much, Jonathan, and thank you all for the opportunity to be here. It's really an honor to share insights with such a distinguished audience and panel. So I left the Central Bank of Brazil a few months ago when my term was over, and I'm very proud to testify on the advancements and also mention the difficulties that we faced over the last years. So one thing that we always emphasize is that the strategy that was followed, and I think is still followed in Brazil, relies on the vision that financial inclusion can be greatly advanced by enabling greater competition from new technologies. And a key part of this strategy was precisely the development of digital public infrastructures that could entice healthy competition between banks and fintechs. So I'm talking about, as Jonathan mentioned, about PIX, which is our instant payment system, and also about open finance, which is the open data ecosystem that we launched a few years back. So both were designed as open public infrastructures. They can be accessed by all participants on equal grounds. And in order to guarantee a successful launch, something that we did early on is that we mandated participation from major account providers. So both in PIX and also in open finance, so we had network effects early on. We had nationwide interoperability from the start. And I think that this strategy was quite successful in terms of financial inclusion, and the numbers, they are very clear on that respect. So the window that has been appropriately measured is from late 2018 to late 2023. So these are 5 years, 2 years before PIX, 3 years after PIX, and the number of active accounts from natural persons jumped from 55 million to 110 million, so it doubled. For companies, it jumped from 3 million to 12 million. So this is a lot of new people into the formal financial system. So in particular, PIX was very successful in putting people in the system because they could do away with cash. They could start doing digital transactions, which are safer. Brazil is a place we have some security issues. It's safer. Everybody has a cell phone. It's convenient. It's cheap. So it really helped people opening accounts and taking accounts seriously. And once they are into the system, although at first they didn't foresee that, they start consuming credit, investment, insurance products, and you know, they move further. But unfortunately, this next step is heterogeneous. So not everybody does that in a life-improving manner. So one particular credit market that I think illustrates this well is the credit card market. So I got some numbers which I think they are interesting. From 2020 to 24, we had 37 million Brazilians getting credit cards. So now we have 106 million people with credit cards in Brazil. That's a lot of credit cards, right? Of these, 97 million are active users. Okay? So almost 100 million people actively use credit cards. So the division is roughly the following. I don't want to crunch too many numbers here, but 40 million people essentially use credit cards as a payment method. They just use the card. They don't take credit on it. They pay what they own after the grace period, and they essentially use it as a debit card, but with the grace period and with some mileage, right? But the rest, the other 60%, essentially, they carry interest-bearing debt on credit cards, and that can be revolving credit, or that can be installment plans for credit card debt. And for revolving credit in Brazil, the rates reach 450%. So that's really enormous, right? And so there are many beginners in the system. So these are people that were not used to this type of product, that got there and started to have to learn about consuming credit in this manner. And the weight of credit cards on expenses also increased tremendously. So in these last years, it increased from 30-something% to almost 60% of the income of people. And part of the increase reflects using cards as a payment method, but part of that also is related to the use of interest-free installments, which can be quite dangerous because people increase consumption without realizing it. So it moved from 11 to 17%. And the interest expenses jumped from 3 to almost 7% of the income of people in the last 4 years, essentially. So that's really difficult. And part of the story is that people hold many credit cards. So the average in Brazil is that each person has 2 credit cards. And if you see the distribution, there is a long tail, 25% own 5 or more. That's really a lot of credit cards. So in a sense, of course, you need a lot of financial literacy to handle 5 credit cards, right? So in a sense, I think the story is that PIX and Open Finance, they really helped with financial inclusion, but the results in terms of financial health have been very heterogeneous, and there is a next wave of work to be done to address that aspect.
Great, thank you very much. I know we can maybe come back to that. But Your Excellency, the UAE operates in quite a different context to Brazil, so a high-income, internationally connected economy, but also one with a very large migrant community as well. The central bank in UAE has recently launched its National Financial Inclusion Strategy, 2026 to 2030, in partnership with the World Bank, the OECD, the Arab Monetary Fund, with an explicit ambition to position the UAE as a global hub for financial health. How does the UAE define financial health in this context? And what does inclusive finance mean when you're also home to one of the most sophisticated financial markets in the world already?
Good morning. Thank you, Jonathan. Thank you, CGAP, AXA, for hosting this event, and very, very important discussion. Financial health for us at the UAE is an evolution to financial inclusion. Financial inclusion is about having basic access to banking products, but financial health is how do these products impact people's life? Does it impact them to the best or to the worst, depending on how those products are offered to those consumers? In the UAE, as a government, it drives the innovation, it drives digital infrastructure, it drives transformational infrastructures at the government level, and that makes it far easier for the private sector to pick up. The UAE, in addition to the fact that the government has that drive, it has a large population of expat. If I give it a number, the expat in the UAE is about 80% of the population, 80 to 90% of the population, inclusive of the migrant workers. Those different nationalities, over 200 nationalities, comes with different backgrounds, different level of education, different level of behavior, different level of knowledge, and different level of needs. We believe that these two are foundational for the UAE to become the global hub for financial health. Why do we say so? Because we see in the UAE all those challenges that are witnessed globally, like the consumer protection concerns, financial literacy concerns, digital adoption concerns, responsible access to remittances. We see them in the UAE as well. And given that these are challenges that we see an opportunity to becoming the connector and to becoming a country that exports some knowledge. And therefore, based on the strategy that we've launched in November of last year, we started the action, and the first action that we've taken was a universal account that converts over 3,000 individuals with low income into individuals who have accounts. The numbers and the diagnostic study that we've conducted proved that having no access gives you less chances of being financially healthy. And therefore, we wanted to work the first action on the financial inclusion strategy is to convert those people who are low income, having only WPS, which is just a one-time salary credit, into a transactional accounts. The second thing that we've done post the launch of the strategy is our ambition to become the global hub for financial health. And for that, we are in the process of developing a hub. We are calling it a nexus because we believe it will connect the left and the right, all the nations, into one. It will bring in policymakers, development partners, financial institutions, researchers, to exchange knowledge, ideas, build practical solutions to advance financial health. So we're simply ambitious. We want to move from national to global. We could be the newest. I've heard Her Majesty starting her journey somewhere in 2008. We are starting now, but we believe we have what it takes to export some knowledge. Thank you.
Excellent, thank you. Well, let's turn now specifically a bit more to insurance. And Renato, you talked about the potential of the infrastructure to help with financial health. I mean, this framework creates an extraordinary potential to extend access to insurance, and particularly for populations who've been historically excluded from risk protection. How are you leveraging these platforms to develop inclusive insurance? And what are the lessons you've learned about how regulatory or market developments can help maximize the benefits of financial digitalization for for inclusive insurance and financial health? Thanks.
Yeah, thanks for the question, Jonathan. Yeah, I think there is certainly much to be explored on how digitization can help inclusive insurance, and I think open finance is actually something that has to play a major role. So in Brazil, it has started to be implemented in 2021. So it had many phases. So we introduced structured data sharing protocols originally for banking. In fact, data sharing about income and about expenses, and then about credit operations. Then we move it to investment, and now the next step is exactly insurance. So of course, the idea that we apply to insurance is very much parallel to what happened in banking. We want to dismantle these information monopolies and level the playing field, the informational playing field for competition. So if the clients consent, he can move around insurers and get better terms. Open finance is already yielding tangible results. So we had more than 100 million active data sharing consents, and tens of millions of Brazilians are actively using open finance to get tailored offers. So more than the interest rate reductions from arbitrage, we're getting customized products. And I think that will have a big impact on insurance. Of course, there is insurance is in a sense the last step, and in a sense there is a lot of infighting in the industry. So insurance is related to big banking conglomerates, and unlike banking, we don't have that many new actors in the insurance sector in Brazil. So we don't have insurance fintechs to the same amount that we had in banking. So in a sense, things are moving slower because in a sense the landscape is less varied. So actually CGAP is actually actively working on that, and my understanding is that over the next 2 years, open insurance will have momentum, but new actors are welcome. In a sense. That's my diagnosis.
Great, and let's turn back to the UAE, and with the financial inclusion strategy, also great opportunities to extend insurance to the underserved, particularly the migrant workforce. How are you thinking about this opportunity, and what approaches are you considering to narrow this gap?
Thank you, Jonathan. Allow me to frame this a bit differently for the UAE context. We don't have an access gap, I would say, in the insurance sphere in the UAE, given that it's a mandatory requirement. So every worker, when they they reach the UAE, it's a mandatory requirement for the employer to offer them an insurance coverage. We see insurance coverage across the board, be it in the property sphere, we see it in the employment sphere. So from access, that's not a gap as such in the UAE, but what we see as a gap is the knowledge, the understanding, the consumer rights understanding of the individual policyholders. And therefore, we see as an opportunity for which we are working on launching a financial health innovation challenge to bring innovators and policymakers and the regulators and the financial institutions into a dialogue to develop solutions that can, ease understanding of insurance policies.
Great, and thanks for emphasizing the if you like, the consumer-centric core element of financial health. Okay, we are running a little short of time, and so we'll move to closing reflections. We've been talking about regulation and what regulators can do. I'd like to close by asking each of you, what is the one regulatory commitment or action that you believe would most help accelerate inclusive insurance in your country or globally in the next 3 years? Who would like to go first?
So I think what applies to inclusive insurance applies to financial help more broadly. And I think when we look at the outcomes that we want to achieve, we have to step back and think about the industrial organization and how actually the industry is in fact competing. In Brazil, the strategy was to put people in with PICs and to rely on competition and an open finance to get people actually consuming products in a wise manner. And open finance, and that applies to open insurance when things are integrated, it does not always work the way we like. It works better for certain products, worse for others. For instance, it works really well for credit that is collateralized. So it really works well for real estate financing. It works well for payroll loans that are backed by people's wages, but it doesn't really work well for credit card debt, for instance, because there is too much adverse selection. So in a sense, one has to step back and think about how to steer the industry to compete through let's say, credit instruments that don't require too much financial literacy from consumers, and that if mistakes happen, consumers, these mistakes they don't generate a burden that's too heavy to carry, in a sense. So one initiative that's being developed in Brazil regarding credit is payroll loans for private employees with a centralized infrastructure that can actually make sure that the installments come from wages. So that's opening a new credit market that can be a key instrument of competition and, in a sense, lead to better outcomes. Regarding insurance, I think open insurance and fintechs getting into the insurance market is something that's going to really drive customization and depthness of this market. So I would insist on, let's say, steering regulation towards healthy products and opening up open insurance.
Thank you, Jonathan. If I am to suggest one commitment is to make insurance part of the broader financial health framework, rather than a compliance requirement. In the UAE, many of the insurance coverage already exist in many areas. But for us, next steps, I would say, is to make sure that insurance is more meaningful, better understood by users, easier to use, more transparent, I would say, and more clearly linked to financial resilience. For that to be achieved, there are three priorities, I would say: a stronger insurance awareness, be it by the government as well as the private sector, better use of data, and more importantly, I would say, is the market conduct on site, supervision over those LFIs, and what do they deliver to the public, I would say. Thank you.
Excellent. Thank you for those comments. And if we wrap up, what we're hearing is, it's been great to hear about the examples of deliberate action to create the infrastructure, the strategies to create the potential, but we're also hearing very strongly around the focus on the market conduct and the consumer-centric approach. So making sure it's not only access, but it's access to, it's responsible access, it's responsible innovation. And certainly that's something focused on from the regulatory side, from the IIS. I'd like to make a big call out to the Access to Insurance Initiative Cape Town Declaration on Inclusive Insurance, which helps countries develop inclusive insurance strategies, and the fact that we'll be working together also with the World Bank on tailored approaches to bring about responsible innovation in this space as well. So thank you. I think it's been a great insights into some of the policy maker and regulatory challenges and opportunities.
I am delighted to be able to participate virtually in the Insurance for All Day as part of the 2026 CGAP Council of Governors meeting. My sincere appreciation to the CGAP and the World Bank for inviting me and the National Bank of Rwanda to take part in this important conversation on financial health across borders. It speaks to a policy imperative that central banks and financial regulators worldwide must address. How do we ensure that insurance serves as a genuine tool of financial resilience, not just for the affluent, but for all our citizens? The timing of this dialogue is critical. In an era of compounding climate shocks, health crisis, and economic volatility, the question is no longer whether insurance matters for financial health, but whether we as regulators have the courage to build the infrastructure and regulatory framework that makes it accessible to everyone. My intervention will cover two topics: Rwanda's national strategy, and second, how health and climate insurance are being woven into a coherent, inclusive insurance architecture in Rwanda. First, insurance has become central to Rwanda's development strategy because we recognize a fundamental truth. Without risk protection, households and businesses remain trapped in cycles of vulnerability. A single health emergency or climate shock can erase years of economic progress. And for Rwanda to reach our Vision 2050 to become a high-income country, we will need an insurance sector that could protect not just the formal economy, but farmers, informal workers, and micro-entrepreneurs who drive much of our economic activity. The National Insurance Strategy is a 10-year blueprint to develop our insurance sector. It was launched in March 2026. Similar to other countries in Africa, the insurance penetration rate remains very low, at 1.9%, that's for Rwanda. We saw untapped potential to build an insurance ecosystem from the foundational level, anchored in deliberate regulatory design, and to increase insurance penetration rate to 5% in the next 10 years. Most importantly, the strategy positions insurance not merely as a financial product, but as a social infrastructure essential for climate resilience, for gender inclusion, and achieving both our national strategy for transformation as well as the Sustainable Development Goals, SDGs. While our strategy rests on 8 pillars, allow me to highlight 3 that are mutually reinforcing. First, digital transformation and integrated data systems, enabling smarter underwriting, fraud detection, and real-time climate risk assessment. Second, public awareness and financial literacy, because without trust and understanding, even the best designed insurance products will fail. Third, strengthened governance and risk-based supervision, ensuring both innovation and stability. We are not implementing these pillars sequentially, but in parallel, with targeted initiatives each year that reinforce each other. For example, our regulatory sandbox for InsurTech directly supports digital transformation, while our consumer protection framework ensures that innovation does not outpace safeguards. This coordinated approach is designed to allow us to reach the 5% insurance penetration rate by 2035, more than doubling our current level. Rwanda is building an integrated approach to inclusive insurance by linking health, agriculture, and climate protection into a coherent framework. At the foundation is Mutuelle de Santé, our community-based health insurance scheme, which now covers 88% of Rwandans, including informal workers, low-income households who would otherwise face catastrophic health expenditures. Rwanda is applying an integrated resilience approach to climate and agricultural risks through climate insurance schemes that protect farmers and vulnerable rural communities against shocks, while linking health, livelihoods, and climate protection into one unified system. One example is the design of insurance products for savings and credit cooperatives, SACCOs, to protect rural communities for climate-related risks. From the example of Rwanda, I am confident that we can leverage on the World Bank, on peer insurance regulators, and the private sector to build an inclusive ecosystem, creating the regulatory conditions for innovation while ensuring inclusion remains central. It's about making policy choices before market demand is fully visible, because we know that financial health is not an accident. It's the result of political will and courageous regulatory design. I thank you and wish you all fruitful discussions ahead.